doing DeFi, greatest in the world, and they finally about to see why. What you know about XRD? I'm smart money, I ain't never on a decline. What you know about NFTs? It's not just Ace, when you finally gonna realize you need scalability, need more utility, then you better call on these guys. I'm going radical, I'm going Radix, I'm going radical, I'm going Radix. Hyperspeed DeFi, never on a decline, building the future, I feel like a savage.
Hello and welcome. I am Piers Ridyard, CEO of RDX Works, a core developer of the decentralized finance protocol Radix, a public ledger entirely focused on bringing DeFi into the mainstream. This is our podcast, the DeFi Download, a show about decentralized finance and all things crypto, where we dive into the details of the projects, assets, and services that are powering the DeFi revolution. Today, I'm joined by Julien Bouteloup, creator of the first ever flash loan, quant at Stake Capital, part of the Curve.Finance core team, and founder and creator of rekt.news. Julien, thank you so much for coming on the show.
Thank you for having me. It's a pleasure.
So we met early in crypto years. From my point of view, I think you were sort of one of the people that I think you were either just finishing an ID project, and then you were just starting Magic Carpet, which was like a drone delivery, tokenized drone delivery based service.
Yeah, that's correct. So I work on ID Box, which was I think one of the first physical project on blockchain back then in 2016, 2017. I mean, physical blockchain project born United Nations, was deployed in Papua New Guinea. And then in Papua New Guinea, I started this new project called Flying Carpet, not Magic Carpet, Flying Carpet. That was not for delivery, even if the original idea was about tokenized, a carpet that you could charge drones and get paid. But then it turned into analysis in real time of crops and other type of commodities, and from using satellite images, where you could, for example, predict the production of coffee in Brazil, or analyze the concentration of cars in parking lot in the US, or carbon offset in the European market. And this was pretty big and a pretty strong project in the sense of being able to tokenize real physical data and then turn them into gold, because you could predict market. You could make market analysis and make place bets on the market, knowing those type of data in advance.
That's really cool. And then from there, I sort of saw you speak a lot. You spoke at a lot of conferences. I've seen you speak sort of on DeFi really early. One of the earliest DeFi conferences that I saw, where you were talking sort of in depth about flash loans and sort of how to create a flash loan smart contract. You are you're involved in a lot of DeFi teams. You've invested in probably the majority of the DeFi Llama Top 100 or the DeFi Pulse Index at seed level or earlier. Probably one of the best connected people in the crypto space. How has that sort of come about? What's your approach to sort of meeting teams, to getting involved in projects? Just talk a little bit about the mind of Julien. How have you got to where you are now?
No, I think sorry for the noise. I think it's really. I mean, my background is mathematics and physics, and I got a master in computer science, electrical engineering, and then start working in machine learning, AI, and also security difference. So my background is a dev, is engineers. But as a French guy, that normally I got the path of being really good in mathematics and physics. But then I moved to the US, where I was taught about business as well. So my mind is divided between being a developer and being programming since I'm 10 years old, 9, 10, but then also moving to building projects, so turning into entrepreneurs, and this kind of skills of being able to build something, but also understand what people are building. This is what really gave me access to those different projects. When I joined in seed, or I basically put myself in the shoes of the person who's building the project. So I only invest in projects that I understand. I could have built if I had maybe some of better skills than those guys. And then I try to either support them, but more than just financially investment. I also we provide quantitative analysis, quantitative algorithmic trading stuff, market making, liquidations on the quant side, but also like from external project. We, for example, on the NFT market with BlackPool or StakeDAO, which is basically also accumulating governance tokens. So the point is like I've been building a lot of different projects in the industry. I was there also before the DeFi space. I joined the Bitcoin ecosystem in the very early by pure luck. But I was there in the early days. A couple of years after. And then before the DeFi space, before any project that was built after Bitcoin ecosystem. So yeah, I have a huge network in the sense that I've been involved in this ecosystem and I'm still alive. I haven't fell into the drugs or fell from a boat accident. So yeah, I'm trying to leverage this network and the skills that I acquired over the past decade.
So what, like, over that time, I'm a stronger believer in the concept of like strong opinions loosely held, right? Like you have to build a set of assumptions or a set of hypotheses about how you think the world's going to be, and then you have to move forwards on that with certainty, knowing that there's going to be new information coming. You can't do it any other way because this is a new space and everything is emerging. What, like, looking back at your time in the crypto space so far, what do you think that you are still strongly believe in the same way you did when you first got into it? And what have you most sort of like changed your opinion of? What were you most moved from?
Repeat the question. Like is it the question about what changed over time?
Yeah. Where have your opinions or beliefs shifted in the time that you've been working in crypto? And where do you still have like the same sort of belief that you had at the start?
Well, I mean, I started as a Bitcoin maximalist, and then I moved into Ethereum maximalist, and now before the DeFi ecosystem, when I was talking about the fact that there will be multiple different blockchains, not just Bitcoin or Ethereum, because this is how society is built. People were laughing, and now today it's completely normal to build on a different blockchain, to be involved in a different blockchain, and to understand that each of those different projects will have a different market fit. So yeah, I think it's rather than staying into my own bubble and my own box, I try to open the door and see what's happening outside. I understand the complexity of the different technology that we're trying to build. And one of them was to move away from being a maximalist type of things. And I know that some people stay there in either of those projects, and they don't want to understand other innovations that are trying to be built outside. So yeah, it changed my conceptions. I try to be more open-minded about other people building, because at the end, what we're trying to do is like build a better society, a better place for humans. And then in the DeFi space, I lived and experienced a lot of different bubbles, not bubbles, but like waves. So we first had the ICO wave, and then we had the NFT wave, and then we had the DeFi wave. All those things, they are part of industrial revolution. And this is just a way that how you can either leverage them for your own, to build on top of them and cruise through those storms. I experienced a lot of bear markets. I think maybe 4 or 5 that we can call bear market now by zooming outside. Yeah, so I'm more, I think, also I stay inside this ecosystem, and I'm still healthy in the sense that I did burnouts a lot, but I think what kept me in the space and trying to first understand what people are building, and also keep building. That's what can keep you feet on the ground and keep looking at the space as a revolution and innovative area.
Right. I mean, you did a video that I think everyone should check out, which is on your Twitter, which is sort of the video. I'm not sure what it's called, but it's basically the Hopium Diaries. That's it.
Hopium Diaries from Rekt. Yeah.
Which I definitely recommend, because I feel like that's like your general perception of like what the future or the possibilities of this space represents.
Well, this was rebuilt like 2 years ago, a year and a half ago, and everything happened before people were looking and watching the video. Were like, no, I mean, This is ridiculous. Governance tokens, lobbying, project banking, financial institutions jumping into this place. That's not possible. JP Morgan, Twitter, Dorsey talking about Bitcoin, not possible. And if you look at this now, people are like, yeah, this is normal. But it was built before when it was not. It was completely, yeah. I mean, imagine like Jack Dorsey taking position about Ethereum or like Bitcoin or any other blockchains, any other type of things. This was really funny.
Right. Yeah. It's sort of like it's obvious in hindsight, or inevitable in hindsight, I think, is sort of so much of crypto. So let's talk about, this bribes and governance, right? So there's this, I think, if you could just give a bit of background on this, because I think that most people aren't noticing this, right? There's a change afoot in governance tokens that is happening right now. And I think it's really important for everyone who's involved in building sort of like protocols and applications to understand this. So if you could just give a bit of background of what's happening in the governance token space today.
Yeah, I think projects. I mean, one of the project that really. The governance idea and lobbying. It's a broader concept. It's not from the blockchain industry. It's really what transformed society and what made society such a kind of a mess today. Like if you look at Europe, you have a European Commission, you have the Parliament. If you look at so lobby is really the system that drives the different or pull the different strings worldwide in a worldwide economy. In the blockchain ecosystem, the first governance tokens, that if you think about them, if they are Bitcoin and other assets, could be considered as governance tokens as long as you can use them to do lobby, so to redirect inflation in such a different way, or to redirect rewards. In a place that DeFi, when DeFi was born, there was a very big project where I was involved with Curve.Finance. Curve.Finance created the concept of VE tokenomics, so VE-CRV. So basically the idea about locking those assets and giving you access to more rewards, but also being able to redirect the inflation of the protocol, redirect the tokens across different pools, depending on the weight of those voting power that you assign to them. And there was
let's break that down a bit, because that's, again, this is like real insider DeFi stuff, and it's a little bit complicated. So Curve is a continuous function market maker. It has a different shape to the function. So you can have stable pools where you get less slippage when you swap between them. But now, since Curve V2, you can also do sort of any pair that you want. They can also create parabolics, so that you can have multiple pairs, like three or four tokens in a pool or more. And when you provide tokens to these pools as a liquidity provider, you get liquid LP tokens, right? And then the LP tokens you can then choose to lock for shorter or longer based on how much rewards you want to get. And Curve is one of the few projects that has created a governance token that just infinitely is created, right? So like it's always being issued.
Not infinitely. It's the same token model as Bitcoin. So you have a 3.3 billion CRV for life, and to make it more like generic and simple, it's roughly 1 divided by square 2. So basically, distribute the inflation is distribute the CRV back to the people, but it will be it will tend to zero. Will never finish because you always divide by an integer.
Right. But there is a continuous flow of governance tokens, and it was created around an emission curve that's a very long-term emission curve. I didn't know it was a Bitcoin curve. That's interesting. And so the obviously, if you lock up your LP tokens, you can't do anything with them. You can't then go and use them in other lending or borrowing platforms. And so there was this thing that Curve did, and I'm just paraphrasing, and please tell me if I'm wrong on this, where they were like, well, if we incentivize long-term liquidity providers to lock up, then we'll give them more rewards. But then they have to lock up for like years to be able to get access to those rewards. And then something happened.
So basically, the more you lock, and the maximum locking period that you can have access to is 4 years. So when you lock one CRV, which is the token of Curve, for 4 years, you get one VE governance tokens. So if you lock for 2 years, you get half of it. So the incentives to lock for a maximum period of time, which is 4 years, is really clear, because you get access to maximum power, which in power you get rewards from the protocol, from Curve. Right. Curve is doing sometimes between 1 and 3 billion volume US dollars per day. So then you issue between 3 and 8 million US dollars a week, and those rewards go to people that have VE tokens. But the problem is then you add some entity and projects that was, because it's clear that if you have access to governance power, you have access to the money in return. So it's more powerful having access to governance than having access to money. Then people got whitelisted. So there were two projects whitelisted, Yearn and StakeDAO. So that was a competition for those two projects to accumulate governance tokens in order to be a big player in the Curve ecosystem, but also outside, because Curve is managing stablecoins, so USDC, USDT, and all big players in the industry. If you think about the monetary system in the world with the Fed and the SEC, like the Fed and the European the central bank, European Central Bank, what they do, they issue tokens. So if you actually control the monetary system, you basically control like some governance decisions worldwide. So it was really clear, and some big players jump in, and then what Yearn and StakeDAO failed to accomplish in a very short time, then you had other players such as Context. They copied the business model of StakeDAO and Yearn, but they executed in a better way. And they accumulate a lot of governance power, and then they had access to a lot of governance power that they could decide the future of Curve. So as long as you are friend with those people that accumulate governance power, it's fine. But at some point, the question is, are those projects that have accumulated governance power, are they also incentivized to respect or to continue building the vision of the protocol? Because for short-term or medium-term, those projects and DAOs, they are more incentivized for short-term player because they want money immediately. So then it becomes very clear that it's really complicated for a project to have external players that own the governance decisions of those projects, but not necessarily participate in the build of those protocols. And that's what we enter in the DeFi space. Now it's really complicated to say, okay, those people that will have control of power in the protocol are incentivized monetary, economically speaking. But then those people, they have access to governance, but not necessarily build for the protocol, which is like the paradox of this ecosystem.
And let's break this down, because I think there's some specific examples that are like blowing my mind a little bit, and I think are like the exact opposite of what we want the system to be. Like you're seeing cartels emerging, you're seeing bribery emerging, and I've spoken to people who are like, yeah, of course I would accept a bribe. So like how this is happening is they're going, okay, well, the VE tokens give me governance decisions on Curve. Now, some of these pools are really valuable, right? And they're valuable not just because of how big they are, but what actually is inside the pool. So adding or removing a token, changing the pool, can actually change the liquidity of a stablecoin, which can change fundamentally how successful that stablecoin is. Because the basis of a stablecoin and ecosystem is liquidity. Nothing else matters. Like Tether's already shown us that. USDT is the interesting one here, because basically what happens is the VE token holders, someone creates a smart contract and goes, hey guys, we'll pay you to if you put your VE tokens in our smart contract, we will then offer your vote to the highest bidder. Anyone can come along and can bid on that vote, and then we'll just separate the profits to you. And people are giving away their governance because they're like, well, why would I not get paid? I'm not making any money from my VE tokens, so I'll just stick it in a smart contract. And then anyone who has sufficient money and understands the system well enough can go, right, I've now got an unfair advantage to be able to put my token in a competitive position, or to incentivize pools that I want more liquidity in because I get to choose where the Curve governance token is emitted from in the first place. And now you literally have people being paid bribes to vote on things that are against their interest because they don't care. They've checked out. They're not engaged with the governance system. I think it is genuinely sickening what's happening right now.
Yeah, man, it's a good recap. And if you think of all those big projects, as mentioned before, if you have a governance play a power in the monetary system, what we're building goes beyond just DeFi ecosystem, because you have players such as Gemini, USDT, Coinbase, USDC, and all these different players that if they don't have a huge APY in those pools, then they don't have liquidity. And at the end, what you actually have is the US, because US, in the sense of having indirectly control of the issuance of those assets, for them it's very important to have a huge APY on the tokens, because then this is exactly what's happening. And I'm not sure in which percentage the US dollars and the DeFi space has been participating to the collapse of the euro stablecoin, because all the people in Europe, I would say like 90% or 99%, this is like statistics that I would guess, because there's no other way, that you have all the users of DeFi having US dollars in a wallet, but they don't have euro. So indirectly, what they've been doing is selling directly the euro to buy the US dollars. And now what they're doing, they sell the euro to buy the US dollar, lend the US dollars, and buy and borrow euro, and then pay with euro, because then if euro collapses, then they have more margin power, which is the spinning wheel of this disaster that we've built. And the thing is, like, it's just a replication of society. It's replication of lobbying and power. And we tried and we said that DeFi will make a better society and change the world for a better place. But what we're doing is basically the replications of exactly what we've done in a traditional financial world. Money drives people and greediness, and that's why we built this video called Ape Tax, and we also released the song Farm Dump by Ape Tax, which is exactly talking about this. Greedy people only care about making money, and they don't actually care about the future of this space. I mean, most of the people, you never put everyone in the same box. And that's the reason why we tend with those sickness things like bribes and boost, where you pay people to make decisions that are actually long-term or medium-term against their interest, but in a short-term play, they get a lot of money. So they're okay, cool. I don't mind shooting myself in the foot for the long term if I can make a lot of money right now. And that's a problem of what we're building. And then you have like all this kind of philosophical thinking, where how can we build quadratic voting or things that will not necessarily incentivize people with money to make decisions, but more the builders to be incentivized to build and continue building for the vision of what we're trying to build. Because at the end, if we basically replicate the same system that we've done in the past with those new technology and tools, at the end we just failed. We make this place a better, it's more accessible and more transparent for users, and more people can access it. But then at the end, it's even worse. We basically, in a non-regulated market, we pay people to make decisions that are going against the visions and the beauty of this space.
Yeah, 100%. So, like, what do you think the solution is? Like, do you think is it things like non-transferable voting? Is it things like representative voting? Like, what? How do you see this being fixed?
The problem is that's what we did in Curve at the early days. It was 2 years ago. When Michael was designing, and it was like locking governance. But then the problem is, like in DeFi Lego, everything is permissionless. So we built liquid locus in StakeDAO that basically represent the governance, which is locked and that cannot be moved. So at the end, whatever you do, even if it's if you try to say non-transferable governance, what you do, you just wrap or tokenize the wallet position of a user, and you incentivize this user to make a decision. So at the end, it doesn't actually change that. It's just real layers of complexity on top of something that we're trying to slow down, but we cannot stop. I think what we need is it's the same. I always take the example of climate change. Climate change in this world, what people usually do, they say, okay, we need to reduce our emissions by telling people what you're doing is better. Okay, do this because it's better for climate. But this is wrong, because people, what they want is to be economically incentivized to make a decision or another. So as long as they don't make more money, you tell them, okay, but in the long term, Earth is dying. Like you can see climate change, like temperature is increasing, everything. It's like the movie, Don't Look Up. What I'm trying to say is, like, instead of telling people this is better if you do that, what about we create better energy alternatives that are making people more money, and at the end is more. So it's not about reducing, it's more about accelerating innovations, creating new technology that will, at the end, benefit the climate change of the Earth. And in technology, in DeFi, is the same. Instead of stopping the things that we know this is not stoppable, well, let's create and innovate. Let's think outside the box. Because the problem of DeFi, I think, at the moment, is we just keep rebuilding the same tools again and again from traditional finance. Okay, it's using a different technology, a different infrastructure. Instead of being centralized infrastructure, is decentralized infrastructure. But at the end, lending, auto market making, like all those different products, they already exist in traditional finance. You can still have access to them. Okay, you need to be KYC, AML, or you need to have access, be born in a certain country to have access to those products. But what I would like to do is, like, think about how can we, as a society, and as this new ecosystem and community building the society of tomorrow, how can we create new products? So new type of thinking, and we can solve this problem by having access to new products, but not just replicating the one that already exists in the traditional market, like bribes and boosts and incentives and inflations, like high inflationary asset and all different things. This is, like people say, oh, the traditional finance is bad. Well, look at the UST, Terra. It was exactly the same. It was just like build a central bank, accelerate the inflations, redistribute back to people so they can make more APY. People are happy with that. They criticize traditional finance where inflation it's just like 8%, but they have no shame of making 100%, 120% inflation on one side and then making money. This is like.
I think the truth is that most people say we don't want, like bankers are all like a cartel, they're insiders, and it's like, well, yeah, but as soon as you're the insider, you're quite happy with it. It's just the fact that you weren't the insider that you were unhappy with. It wasn't actually that you really had a moral problem with it, because if you did, then you wouldn't be doing these things.
That's the thing. That's the thing. Like it's in this space. Sorry, I cut you. Sorry.
No, go on.
What's fascinating me, what's fascinating is people are like, yeah, the bank and the traditional finance, they are the bad guys. It's opaque and but at the end, if you really think about it, in Europe or in the US, you have lobby, but you know who are the lobbyists.
Right.
You have regulated market. You know the players, BlackRock, liquidators, and all the stuff. Well, here in DeFi, it's a complete shit show. Like influencers doing some manipulation on the market, liquidation in one side, bribes in the other, people getting money to make decisions in a certain direction, to inflations, like all the things. But they still say that traditional finance is bad. Well, if you look at our space, we have huge influencers. How many of rekt.news leaderboard, those projects were driven by influencers making shit ton of money rug pulling the entire community, but not doing this once, doing this 3, 4, 5, 6 times.
Right.
And now they are
Right.
sitting in Dubai and enjoying some nice cocktails.
Right. Well, let's talk about that. So, like, you were one of the founders, the founder of rekt.news. How did that come about?
Yeah, I found rekt.news, yeah. And an amazing
So,
team as well.
So this is rekt.news. If no one's checked it out, you definitely should. Like, Radix does a bunch of retweets of the rekt news where we do a dive into how the exploit occurred, and also how the programming language that we created, Scripto, would help prevent a lot of these sort of hacks and exploits, but the sort of the ones that are generally as a result of bugs rather than a result of economic attack. Obviously, economic attack is a different one, but I would suggest anyone should check them out. They're fascinating, and I think, in some ways it's made you very popular, in other ways it's made you very unpopular in the industry. It does surprise me how often people get angry about the people. When an exploit happens, or when a rug pull happens, or when something happens to their favorite project, people get angry about the fact that you'd be covering it or posting it, which is such an interesting reaction. So, like, why did you first create it? What did you see as missing in the market at that point?
Well, it's during the ICO craziness in 2017. You had people that creating landing page to raise $100 million by by having just an idea, and this was really clear there was no product, and they would build the project. Well, myself, what I did, instead of going for the easy path of making money, I wrote articles criticizing and writing like very long posts about those projects. Some of them that were raising capital, and there was pure scam, and was about to rug pull those ecosystem. And when I did it, then some of those projects that had raised significant amount of money, and now they all rug pull the community, but they attacked me for defamatory content, and I had like a 3.5 million US dollars lawsuit against me that I fought in UK class actions in UK legal system. Yeah, it was really painful in the sense that those projects were pure scam, but they had a sufficient amount of money that they could attack anyone that was going against them. Well, guess what? Now they all disappeared, and they all wrecked the community and whatever. But the beauty of it, what I learned from that is, whatever you write online, if you say, okay, this person is a scammer, or this is a scam, this is basically being defamatory. So I learned how the media industry works. And then when you read a newspaper, you say, okay, be careful. There is a danger for investors to invest in this product. But a newspaper or someone will never say this product is a scam, or this is a scam,
Right.
because then it's being defamatory. So I learned about this. And then a couple of years after, 2 years ago, so 3-4 years after, I decided to restart Rekt. And then I found some very nice, very strong writer that could help me work on Rekt. And this is how we founded the project, but being completely anonymous, which is basically the beauty of it. It's like any articles that I post on Rekt, people cannot attack them, because there's no one. Rekt is basically a place for hosting content and not creating the content.
Right.
We do also video, we do music, and we command people to listen to this farm dump ape tax music, which is basically talking about this space about DeFi and ape tax and farm dump some shit coins, and it's really funny.
So you restarted Rekt because you felt that there needed to be a place where people could go and check to see if something they cared about had a problem. It's fascinating. How do you choose, or how do the people who create the content choose which ones they write up and which ones they don't? Like, what's the selection process, if there is one?
Well,
because there's so many scams and rug pulls, and there's so many things that happen.
Yeah, it's so in Rekt. So I received a lot of attacks and how to say, like menace from projects and also a lot of investment and people wanted to invest in the project. But the things like people, rekt is agnostic, and rekt will attack any project, not attack, but will cover any project without attacking any of them. Meaning that rekt will always try to analyze blockchain content, so blockchain history data, to tell and to explain what's happening. But will never make its own conclusions. We'll always let the user make its own conclusion about the story. So we try to be agnostic generic and agnostic as much as possible. And then when we cover news, we cover the ones that are mostly impacting the ecosystem. We never cover rug pull from day one. If a project is a rug pull from day one, it's a scam. We don't need to cover this because this is clear. This is a scam. This is clear. This is a rug pull, and there's no point of covering a well sophisticated scam from beginning. What we do is like really like what's making this DeFi place a revolution, industrial revolution. It's like we're trying to pick and choose the project that are really impacting the community, really impacting the future of whatever we're trying to build, and then we cover them. So we cover any exploits, but we also cover behaviors. We try to never give names, but for example, influencer, people affecting the community, whatever we experience in this bear market, that was really clear. Like results, very clear aspect that those bear market were created by some big pseudo influencers in this ecosystem, like Terra, like other people pushing those projects. For example, people selling their bags, people like all the different things. What we're trying to do is like we're trying to build a project that is built for the people and serving the people, and at the end doesn't actually get paid to push something.
Right. Right, and I think that's super great, and a testament to sort of what's been a theme through this entire interview is like the underlying sort of moral compass that you have in your attitude to what people should or shouldn't be doing. The last question I have, and we are just coming up on time, is are NFTs dead?
NFT is dead. Well, I have a strong opinion on this. We experienced the same. This is a wave. So we did the ICO. 99% of all the ICO project died, and we moved to NFT. I mean, DeFi space. 99% of all the DeFi project died, and then we did NFT. 99% of all the NFT project died. But in each of those waves, 1% created very strong pillars. And it's exactly what we're experiencing today. And that's the reason why in BlackPool, we choose the NFT market, one of the projects like BlackPool, which is basically investing in the NFT market and producing yield on top of those assets. Can be gaming, can be real estate, can be arts, can be music. What NFT are turning into is like those NFT, JPEG and all this stuff, this is dead in the sense that also with AI generative creative content and all that thing, there's no point of creating some fake JPEG and selling them for millions of users. Except some of them, they create really unique community, giving access to unique content, giving access to unique physical places in the world. Those ones were created during this wave and only 1% survived. Well, now we're entering in the NFT market. They are traditional financial products, bonds, debts, swaps. All the different things will be powered by NFTs because NFTs are non-fungible assets. Yeah. So basically, it's a really good application for those products. Yep. We have to like real estate, a piece of building, house, and all of them. Yeah. But at the end, you will not see them as NFTs. You just have access to products. Right. But NFT will be powering the technology behind those products.
Right.
Exactly. So, and this is encapsulating a $1 trillion market.
Yeah, I mean, real world NFTs for real world assets make so much sense because most assets in the world are non-fungible. Like that is literally the description. They are unique physical objects. So like that makes so much sense. And then again, agreements, like most contracts are non-fungible. That can be so like, yeah. Julien, it's been such a pleasure talking with you. Thank you so much for coming on the show. If people want to find out more about the projects you're involved in, where should they go and what do you recommend them checking out first?
Well, I mean, go to my Twitter. I tend to share as much as the more you share, the more you get. As is my motto. But yeah, go there. You see my project. You will see the project I'm involved, and also project that I've been investing in. So obviously not recommendation for investment, but yeah, I try to share as much as possible. I have an academy, we have a school, we have a few different things that we can try to educate people in this the future of what we're building. And so go to Twitter. You can also message me. I'll open a DM. So it's a great pleasure to talk with you guys. And Piers, again, thank you very much. It's a great podcast.
You're very welcome. And your Twitter is a bit weird, so it's at BNEILUJ. That's Bravo November Echo.
It's my Counter-Strike pseudonym from a long time ago, from 2006 or 8. But what it means is Julien reversed. If you see that Julien reversed, and then the B for my last name, so Julien Bouteloup.
It looks like the cat fell on the keyboard, but now it makes sense. Okay, cool. It's such pleasure. Thank you so much, and speak to you soon.
Need more utility, then you better call on these guys. I'm going radical, I'm going Radix, I'm going radical, I'm going Radix. Hyperspeed DeFi, never on a decline, building the future, I feel like a savage.